So, welcome to This Explainer. Today, we're unpacking a hidden system, one that literally dictates global prices, energy flows, and government policy basically everywhere. We're going to visualize exactly how this invisible engine actually operates and why it affects pretty much every single transaction you make. Let's jump right in with a big question. What system do you think truly controls the global economy? I mean, if you had to guess the absolute center of global power right now, what's the first thing that comes to mind? You'd probably guess Wall Street, right? Or maybe the global banking system or the stock market. But actually, it's something known as the petrodollar. For over 50 years, this invisible engine has been completely shaping our world. Yet, it flies totally under the radar for most people, mostly because it just hums quietly in the background of almost every single purchase we make. So, what exactly is it? Well, to really wrap our heads around the petrodollar, we first need to acknowledge one massive reality. Our modern global economy is completely, utterly dependent on oil for nearly everything. We're not just talking about putting gas in our cars or fueling planes and ships, though that's huge. Oil is the foundational ingredient for plastics. In a lot of places, it's burned directly just to keep the lights on. We even rely on it to make everyday chemicals and, crucially, the fertilizers that literally grow our food. Our whole modern existence is totally intertwined with this stuff. Because oil is so undeniably essential, this massive, never-ending global market has naturally sprung up. But here's the catch. The distribution of this resource is incredibly uneven. On one hand, you have massive producers like Saudi Arabia who are constantly selling. On the other, you have massive consumers like Japan who need a ton of it but produce very little themselves. This huge geographical imbalance creates a perpetual, massive flow of global trade. Which leads to a really interesting question. How on earth did the US dollar come to absolutely dominate this specific make-or-break market? Let's trace the steps here. Back at the end of World War II, the United States emerged with its economy largely intact, especially compared to a devastated Europe. This led directly to the 1944 Bretton Woods Agreement, which essentially anchored the entire global financial system right to the US dollar, and at that time, the dollar was safely backed by physical gold. But then, we hit 1971. This is the famous Nixon shock, where President Nixon completely severed the U.S. economy from the gold standard. And shortly after that huge move, this brand new unbacked system was put to the ultimate test by the massive 1973 OPEC oil crisis. Let's zoom in on that 1971 Nixon shock for a second. Cutting the dollar's tie to gold basically shoved the entire world into a fiat currency economy. If you're not familiar, a fiat currency isn't backed by physical gold or silver sitting in some vault. It gets its value simply from public trust and economic stability. Now, you'd think losing that gold backing would tank the dollar, but it actually stayed dominant. Why? Well, simply because the US economy was staggeringly huge, the government was super stable, and honestly, a ton of global transactions were already strictly running on dollars anyway. It basically just became the world's default reserve currency. Okay, but then came 1973, and things got wild. The world was completely shaken up. During the OPEC oil crisis, Arab oil-producing countries suddenly stopped selling oil to nations that supported Israel in the Yom Kippur War, and the United States was right at the top of that list. This flex of political leverage caused global oil prices to just abruptly quadruple, literally a 4x increase practically overnight. This huge, sudden spike caused absolute chaos. Massive global shortages, cars lined up for miles at gas stations, and severe inflation ripping through almost all Western economies. Now, what's truly fascinating here is the geopolitical handshake that followed that absolute mess. The US realized it desperately needed to secure its energy future, so they made this incredibly strategic agreement with Saudi Arabia. And the terms were beautifully simple. The United States promised ongoing ironclad military protection and weapons support to the Saudi kingdom. In exchange, and this is the key part, Saudi Arabia agreed to sell its vast reserves of oil exclusively in US dollars. And because Saudi Arabia was the heaviest hitter among the oil-producing countries, all the other producers quickly had to follow suit just to stay competitive. This created the massive global reality we're still living in today. Just think about it logically for a second. If you're a country like Japan, you absolutely need oil to survive and power your cities, right? But to buy that oil, you first have to get your hands on US dollars. Therefore, every single country in the world basically has to hold US dollars in reserve. And just like that, the petrodollar system is officially born. This constant, baked-in global demand acts as an absolute superpower for the United States. It sustains a phenomenally strong dollar globally, year in and year out. Because literally everyone needs dollars, the US government can borrow money way more easily and at significantly lower interest rates than other nations. Plus, it gives the US immense power to enforce global financial sanctions. I mean, because so many international transactions must flow through US-based banks just to clear those dollar payments, the US holds this incredible leverage over global economic behavior. And this whole dynamic builds into an incredibly ingenious, self-sustaining loop that economists call petrodollar recycling. Here's how it works. Step 1. Foreign countries buy oil, paying exclusively with US dollars. Step 2. The oil-producing nations earn massive amounts of those dollars. Step 3. Instead of just sitting on mountains of cash, those producers invest it right back into US assets to earn a return. And finally, step 4. That massive influx of foreign investment ensures the dollar stays super strong, leaving the entire system perfectly primed to start the cycle all over again. The absolutely crucial takeaway here is that oil producers aren't just stuffing this cash under a giant mattress. They inject billions upon billions of dollars right back into the global financial system. This petrodollar recycling flows straight into U.S. government bonds, shares in massive American companies, highly lucrative real estate projects, and broader global markets. So the money flows out of the U.S. to buy oil, and then it reliably flows right back into the U.S. financial system, perpetually fueling and expanding the American economy. It's a brilliant setup. But let's fast forward to right now, the present day. Because recently we're seeing real coordinated attempts to actually challenge this dominant system. Several countries are actively trying to bypass the dollar by trading oil in other currencies like the euro or the Chinese yuan. Nations like Russia, Venezuela, India, and Pakistan are aggressively exploring these workarounds. Actually, this is also a primary publicly stated goal of the BRICS Trade Alliance, which is a major partnership of developing nations that are deliberately trying to reduce their global dependence on the US dollar. Which brings us to a super fascinating contradiction. Here is the literal million-dollar question. Why are countries that are openly hostile to the US still trading their single most valuable resource in US dollars? Why is it so incredibly hard for these nations to actually break away from the petrodollar system, even when they so desperately want to? Well, the answer really boils down to something called network effects. Think about it kind of like when Facebook launched Threads to compete directly with Twitter. Even if you build a shiny new platform, it is incredibly difficult to convince everyone to suddenly jump ship when all the global activity, the core audience, and the technological infrastructure are already deeply entrenched on the original network. In global trade, the US dollar is that original, undisputed network. And this creates what economists refer to as the stickiness of the dollar. Moving away from the petrodollar isn't just about swapping out the physical currency you hand over at the register. Suddenly switching currencies disrupts decades of carefully negotiated existing contracts and highly complex pricing models. It completely ruins established financial hedging systems and international insurance policies. But most importantly, the US dollar offers unparalleled liquidity, meaning a nation can move billions of dollars in literally seconds without crashing the market. And it's all backed by incredibly strong, predictable legal protections. However, just because it's exceptionally difficult definitely doesn't mean it isn't happening. We are observing these gradual, really calculated shifts, rather than some overnight revolution. For instance, Russia and China are actively increasing their bilateral oil trade, using the Chinese yuan. We're even seeing major energy transactions settled directly in rubles, and these same nations are systematically dumping their strategic holdings in U.S. treasuries. Basically, they're carefully trimming their dollar use where it's politically necessary, especially to dodge Western sanctions, while still using the dollar when it's the most convenient and efficient option. And get this, their strategy to destabilize the dollar isn't just limited to oil. Alternative powers, notably China, are aggressively pushing into the surging gold market right now. They're helping drive prices to unprecedented levels, potentially to further break the financial grip of the US dollar. Which leaves us with a massive question to ponder. Are we actually witnessing the beginning of the end for the invisible engine that runs the world? Will a new gold standard ultimately dismantle the petrodollar system forever? That is a wildly important developing story you won't want to miss. Thanks for joining me for this explainer, and remember to always keep questions